The economy of Guatemala is considered a developing economy, highly dependent on agriculture. The Guatemalan economy grew 3.3% on average from 2015 to 2018. However, Guatemala remains one of the poorest countries in Latin America and the Caribbean, having highly unequal incomes and chronically malnourished children. The country is beset by political insecurity and lacks skilled workers and infrastructure. With a population of 18 million and a GDP of $77.6 billion in 2020, Guatemala is the largest economy in Central America. Measured by its GDP per capita, Guatemala is an upper-middle-income country. However, the economic stability and upper-middle-income status have not translated to a significant reduction in poverty and inequality. A strong recovery is expected for Guatemala, with GDP projected to grow by 5.1% in 2021 and 4.1% in 2022. Risks remain, particularly given the uncertainty of COVID-19 developments. The economy of Puerto Rico is classified as a high-income economy by the World Bank and as the most competitive economy in Latin America by the World Economic Forum. The main drivers of Puerto Rico's economy are manufacturing, primarily pharmaceuticals, textiles, petrochemicals, and electronics, followed by the service industry, notably finance, insurance, real estate, and tourism. The Commonwealth has a modern infrastructure, a large public sector, and an institutional framework guided by the regulations of U.S. federal agencies, most of which have an active and continued presence on the island. On a global scale, Puerto Rico's dependency on oil for transportation and electricity generation, as well as its dependency on food imports and raw materials, makes Puerto Rico volatile and highly reactive to changes in the world economy and climate. The Dominican Republic is an upper-middle-income developing country with important sectors including mining, tourism, manufacturing, energy, real estate, infrastructure, telecommunications, and agriculture. Over the past 25 years, the Dominican Republic has experienced a remarkable period of robust economic growth. The economy continued its rapid expansion in the years leading up to the COVID-19 pandemic. And between 2015 and 2019, the Dominican Republic's annual GDP growth rate averaged 6.1%. And as of 2019, the country was on track to realize its ambition of achieving high-income status by 2030. However, the COVID-19 pandemic has pushed the Dominican Republic into its first recession in nearly 17 years. Many have been lost their jobs since March, with negative implications for poor households, women, and informal workers. Structural reform necessary to accelerate formalization includes leveling the competitive playing field for new entrants, small firms, and local suppliers, and updating business regulations. Ecuador's economy is based on the export of oil, bananas, shrimp, gold, other primary agricultural products, and money transfers from Ecuadorian immigrants employed abroad. As a result of shifts in global market trends and the development of technology, the country has experienced economic development in other sectors, such as textiles, processed food, metallurgy, and the service sectors. Between 2006 and 2014, GDP growth averaged 4.3%, driven by high oil prices and external financing. The year 2020 was a difficult one for Ecuador. The COVID-19 health crisis triggered a deep recession that led to a rebound in poverty. This crisis amplified the macroeconomic imbalances that the country had been working to correct since the oil price boom ended. It also forced the government to restructure its debt with bondholders. Finally, the crisis also revealed structural weaknesses such as the lack of macroeconomic buffers, a high level of informality, a poorly prepared healthcare system, and large gaps in public service access. Ecuador needs to make its public policies more efficient to protect the most vulnerable population and improve access to economic opportunities. The economy of Peru is an emerging, social market economy characterized by a high level of foreign trade, and an upper-middle-income economy is classified by the World Bank. Peru's economy is dependent on commodity exports, making the economy at risk due to price volatility in the international markets. In recent decades, the economy has begun to diversify. The nation has more recently experienced increased development following the 2000s commodities boom, with improvement in government finances, poverty reduction, and progress in social sectors. The COVID-19 pandemic has had a devastating impact on the country. A strict and prolonged quarantine led to a decline in GDP of 11.1% in 2020. Employment fell an average of 20% between April and December. The economy is now expected to stabilize at rates close to those recorded in the pre-crisis period. The challenge for the Peruvian economy lies in accelerating GDP growth, promoting shared prosperity, and providing citizens with protection against shocks, both generalized and individual. Colombia has experienced a historic economic boom over the last decade. Poverty levels were as high as 65% in 1990 but decreased to under 30% by 2014, and 27% by 2018. They had decreased by an average of 1.35% per year since 1990. Petroleum is Colombia's main export. Colombia has the fastest growing information technology industry in the world. Modern industries like shipbuilding, electronics, automobile, tourism, construction, and mining grew dramatically during the 2000s and 2010s. The COVID-19 pandemic hit Colombia hard but supported by the prompt and decisive actions that the government took to protect lives, livelihood, jobs, and firms, economic activity has been recovering fast. By June 2021 reached almost the same level as at the end 2019, despite a temporary slowdown owed to mobility restrictions in April and protests and civil unrest in May. The economy is projected to grow 7.7% in 2021 and be solidly back at 2019 levels before year-end. As the economy gets close to its potential over the medium term, growth is projected to slow down. Investment is expected to rebound gradually in 2022 as major infrastructure projects such as the 4G road network and the Bogotá Metro resume at full speed. The economy of Chile is a high-income and market economy. The country is considered one of South America's most prosperous nations, leading the region in competitiveness, income per capita, globalization, economic freedom, and low perception of corruption. Although Chile has high economic inequality, as measured by the Gini index, it is close to the regional mean. The 2019-20 protests exposed the vulnerability of the socioeconomic system, with protesters demanding a change in the country's political and social direction. The stagnation of growth and productivity in the last decade has raised questions over the sustainability of the country's growth trajectory and the type of reforms needed. The COVID-19 pandemic has plunged the economy into the worst recession in decades. GDP contracted 6.0% in 2020. Over 1 million jobs were lost, affecting mostly women and workers in commerce, agriculture, and hospitality, further undermining the fragile middle class. Growth is expected to rebound to 5.5% in 2021, on the back of a continued government stimulus and a rapid vaccination rollout. Another factor that will boost the economy is accumulated liquidity due to monetary stimuli and pension fund withdrawals. Although uncertainty will curb private investment recovery, domestic demand will be spurred by accommodative policies. Argentina is a developing country. Argentina benefits from rich natural resources, a highly literate population, an export-oriented agricultural sector, and a diversified industrial base. Argentina's economic performance has historically been very uneven, with high economic growth alternating with severe recessions, particularly since the late 20th century. The historical volatility of economic growth has limited the country's development. Urban poverty in Argentina reached 40.6% of the population in the first semester of 2021, and 10.7% of Argentines live in extreme poverty. To deal with this situation, the country has prioritized social spending through various programs, including the Universal Child Allowance, a cash transfer program that reaches approximately 4 million children and adolescents up to age 18, equal to 9.3% of the population. The impact of COVID-19 has been significant in Argentina. During 2020, the country's GDP lost 9.9 percentage points, the largest retraction since 2002. The economy of Mexico is a developing market economy. Since the 1994 crisis, administrations have improved the country's macroeconomic fundamentals. Mexico was not significantly influenced by the 2002 South American crisis and maintained positive, although low, rates of growth after a brief period of stagnation in 2001. However, Mexico was one of the Latin American nations most affected by the 2008 recession, with its gross domestic product contracting by more than 6% in that year. The economy contains rapidly developing modern industrial and service sectors, with increasing private ownership. As an export-oriented economy, more than 90% of Mexican trade is under free trade agreements with more than 40 countries. The economy contracted by 8.3% in 2020, with a sharp drop in the first half of the year as demand and supply shocks stemming from the COVID-19 pandemic had deep impacts on firms, employment, and households. The recovery in 2021 is going strong and relies on the speed of vaccination, the pandemic dynamics concerning the new variants, U.S. growth, and the recovery in the labor markets. To enable a better and sustained recovery over the medium term, the country will also need to deal with some of the most pressing pre-crisis challenges to growth and inclusion. The economy of Brazil is a developing mixed economy. As of late 2010, Brazil's economy was the largest in Latin America. From 2000 to 2012, Brazil was one of the fastest-growing major economies in the world, with an average annual GDP growth rate of over 5%. However, Brazil's economic growth decelerated in 2013 and the country entered a recession in 2014. The economy started to recover in 2017. Brazil has remained stuck in the middle-income trap and also faces high unemployment. According to data from the Brazilian Institute of Geography and Statistics, extreme poverty had increased by 11% in 2017. The COVID-19 pandemic exposed Brazil to unprecedented health, social and economic challenges, leading to a 4.1% GDP decline in 2020, followed by a rebound in 2021. An emerging recovery in demand, both domestic and external, and a pickup in commodity prices are expected to push GDP growth to 5.3% in 2021. Rising vaccination rates also contribute to the expected improvements in growth rate. Striking the right balance between protecting the poor and ensuring sustainable public finances, including at subnational levels, will be a key policy challenge in 2021. Recent reforms in the infrastructure sector, together with the administration's renewed interest in the climate agenda, provide sound opportunities for Brazil's green recovery and for lifting millions of Brazilians out of poverty. The economy of Canada is a highly developed mixed economy. As with other developed nations, the country's economy is dominated by the service industry, which employs about 3/4 of Canadians. Canada is considered an energy superpower due to its abundant natural resources and a fairly small population of 38 million inhabitants, in relation to its land area. Canada has the third highest total estimated value of natural resources, valued at $33.2 trillion in 2019. Canada is unusual among developed countries in the importance of the primary sector, with the logging and energy industries being two of Canada's most important. Canada also has a sizable manufacturing sector, based in central Canada, with the automobile and aircraft industry being especially important. According to the Corruption Perceptions Index, Canada is perceived as one of the least corrupt countries in the world, and is one of the world's top 10 trading nations, with a highly globalized economy. Canada historically ranks above the United States and most Western European nations on the Heritage Foundation's Index of Economic Freedom, while experiencing a relatively low level of income disparity. The country's average household disposable income per capita is well above the OECD average. The economy of the United States is a highly developed free market economy. The nation's economy is fueled by abundant natural resources, a well-developed infrastructure, and high productivity. It is the world's largest economy by nominal GDP and net wealth. The United States has the most technologically powerful and innovative economy in the world. Its firms are at or near the forefront in technological advances, especially in artificial intelligence, computers, pharmaceuticals and medical, aerospace, and military equipment. The US dollar is the currency most used in international transactions and is the world's foremost reserve currency, backed by its economy, its military, the petrodollar system, and its linked euro dollar and large US treasuries market. The U.S. economy experienced a serious economic downturn during the Great Recession, defined as lasting from December 2007 to June 2009. However, real GDP regained its pre-crisis peak by 2011, household net worth by second quarter of 2012, non-farm payroll jobs by May 2014, and the unemployment rate by September 2015. Each of these variables continued into post-recession record territory following those dates, with the U.S. recovery becoming the second longest on record by April 2018. In the first 2 quarters of 2020, the U.S. economy entered a recession due to the COVID-19 pandemic. The COVID-19 recession has been widely described as the most severe global economic downturn since the Great Depression, and far worse than the Great Recession.